Alright, welcome back to Brother Dog's Finance. This is a week ahead market overview on S&P 500, Nasdaq, and Dow 30 based on MRI. A quick reminder that MRI, the market regime identification, is a moving average based system that tells what the current market regime is. And for exact introduction, please check my previous video. Let's jump into it. First is the S&P 500 SPY. Though there is a pullback since the start of August, the short-term moving average is still way higher than the long-term moving average, indicating a very strong bullish trend for the SPY, the S&P 500, which forms around maybe like half year back around March time, when short-term moving average crossed the long-term moving average, and then just keep going up since then. Moving to the MRI system, the recent pullback just seems to be a very benign one. The market went up too quickly during May to July, and it's time to take a short break here. And based on the position of short-term moving average, the SPY is currently under the expansion phase, meaning from medium to long-term point of view, the market is still in a very healthy rally with volatility at relatively lower end. It is perfect timing to add positions or allocate to risky assets. Then let's move to the Nasdaq 100 here. Similar and even stronger bull market trend since the start of the year. Current short-term moving average is way above long-term, and for the time being, it doesn't seem we have to worry too much about the recent sell-off in the tech sector. While today there is a very big rally on the market. Again, the MRI indicator suggests it's the expansion phase for QQQ as well. Time for small positions in leveraged ETFs such as TQQQ, QLD, the 3 times, the 2 times, may not be a bad idea. Lastly is the Dow 30 ETF, the DIA. The bull trend here is much weaker, as short-term moving average is not far above the long-term. And if you compare the recent market falls to the ones within recent 1 year, there's still no reason we believe it is start of the market collapse or so at the current stage. The MRI chart here is showing the similar pattern, expansion phase again, and time to just consider adding positions. To summarize, all 3 major US market indices are under the expansion phase based on the MRI, and for investors with relatively high risk tolerance, you can definitely consider some 2 times or even 3 times leveraged positions. Overall, the US stock market is still under good shape, no warnings being detected based on the recent market movement for the time being. Risk on week, and good luck with trading. Let's go get rich.